This is the ASFPM Insurance Committee call from November 21st, 2017. Your meeting leader is Bruce Bender. Other presenters include Steve Samuelson, Chad Berginnis, and Bill Neckerman. Thanks for joining.
Going through some highlights of happenings that have occurred since our last call. If you want to take a look at the next slide here, what we'll start with is, actually, you know what, I'm going to pass this over to Steve. Make sure if you've got questions, hold them. We'll try to identify who you are and take your questions as we go. Otherwise, Becca's going to try to keep everybody on mute, or if not, keep your phone or audio on mute if you could. With that said, I'm going to flick it over to Steve.
Thanks, Bruce. So anyway, this is the agenda for today, folks. So we're going to talk about the committee co-chairs retreat that they had in Madison, Wisconsin. So I went there to represent our insurance committee with the other different committee chairs. Talk about recent FEMA insurance industry meeting highlights, the federal flood insurance program changes, the NFIP reauthorization. That'll be interesting. I'm looking forward to hearing that. The elevation certificate is expiring, and we are working on a group to submit changes to the elevation certificate and increase cost of compliance, other resources, updates on what's going on with agriculture structures, and a little bit about private flood insurance. So that pretty much takes care of the agenda, and if we jump into the next slide, I'll just tell you a little about the committee's co-chairs retreat. There we are, hard at work. And basically the point of the committee co-chairs retreat was to work on our work plans for the coming year. What is the flood insurance committee going to be doing? And we used basically the same work plan as last year, but we added a couple of items. We added a base level engineering as one of our work plan items. So you know that now we have new digital flood insurance rate maps in some places, other places we don't. And so you can use things like water surface elevation grids and LIDAR in ways that you couldn't before to come up with base level engineering to determine a base flood elevation. And how are those going to be used for insurance rating purposes in the future when you may have a map that was based on 10-foot contour intervals as opposed to LIDAR, which is more accurate, and you'd think you'd want to rate insurance off the more accurate one. Obviously, this is something for the mapping and engineering committee to be involved with, so that's why we had a retreat with all the different committee members to decide how we were going to work together on these new items we added to our work plan. We also added a new item to our work plan about agriculture structures in the floodplain, and we're going to be working with the regulations committee because they're going to be talking about how to regulate agriculture structures, not just how to insure them, and the natural and beneficial functions committee also asked for us to coordinate with them. And that's pretty much a quick summary of the committee co-chairs retreat.
Great, thanks, Steve. The next part we want to do is just kind of give you an update of the FIPNIC IBHS FEMA meeting. This is a meeting that's held 3 times a year. FIPNIC is the Flood Insurance Producers National Committee. It represents 3 insurance agent associations, the Professional Insurance Agents, known as the PIA, the Institute Insurance Agents and Brokers Association, known as the Big I, and the Council of Insurance Agents and Brokers, known as CIAB. It's kind of the sounding board for that FEMA uses to hear what the issues are, as well as bounce ideas back about upcoming changes, proposed changes that might impact agents. Also, part of that, and this is kind of a new format, we had simultaneous meeting with the Institute of Business Home Safety Flood Committee. IBHS represents the property and casualty companies and focuses on reducing future damages, which is right up with you know, what ASFPM is very interested in. And in that, they have a group of write-your-own companies. The average attendance is probably about 17 or so carriers that participate in this meeting, and of course the 3 associations. For years, FIPNIC has extended an invitation for ASFPM to sit on the board. In fact, Chad, our executive director, that's where actually I think I first met him, was at a FIPNIC meeting when I was on the write-your-own side of things. and was chairing the marketing committee when it existed. So we met with FEMA, as I said, 3 times a year. The last one was October. Not a lot of things to really highlight. We talked about the that were controversial or anything. A lot was talked about what was going on with the hurricane recovery and the claims. The point being made that over $1 billion in advance claims payments had been made, which was something really new and different. And FEMA is hoping, as well as the insurance industry, that keeps down noise level, if you will, around adjusting of claims, getting that money out there much faster to them. Other highlights, they went over the NFIP changes that are coming up, which we'll highlight later on in here. They gave a little update on what the C3 contract, as you all know, FloodSmart is the national marketing campaign ended last September 2016, and a more direct type marketing is now being applied by FEMA, not so much national. And that group known as C3 gave some updates, some pilot tests that they did, like in Palm Beach County and others, to try to, and then we'll see how that target marketing did for around a map change to see if it helped retain policies, because there was many that were going out in that. They talked about that the underwriting manual, hopefully coming up early next year, they'll have 2 versions of that that are updated, and have a final one, I think, out in October. David Starrett from the Office of the Federal Insurance Advocate gave us an update on their activities. They'll be coming out with a report summarizing their top issues that they see that FEMA should address. However, he would not give us a peek preview because he had not given FEMA the opportunity to review it yet. So we'll have to wait to see on there. Majority of their, about half of the inquiries they get at the advocate's office, mostly, like from policyholders, are underwriting. 21% are about claims related right now. And only 6%, a small percentage, are floodplain management grant and mapping related. So those were kind of some of the highlights that came out of it. They also pointed out that Milliman Company had been hired to start them working on Risk Rating 2.0. FEMA is seriously looking at totally redesigning how they rate flood insurance. Hopefully it'll come in about 3 phases over the next couple of years. So that was an interesting highlight as well. And we'll be getting my notes up on the website, just like our work plan is. So probably right after Thanksgiving, that'll be updated as well. Speaking of those changes, not a lot going on for this past October, as you probably heard. In the past, when you canceled a policy, FEMA kept the entire surcharge, and they now have changed that so they'll pro rata, which follows kind of the typical, what I'll call regular or real insurance way of handling premiums when a policy is canceled. And they actually reduced the federal policy fee for $25 if you have a contents-only policy that does not apply to the PRP, but other policies as well. In this coming April, the rate changes are going to stay right around the same as what they were last year, average around 7%. And some of the highlights, the post-firm A are anywhere from 0 for like AOs and stuff to barely 2%. The primary residences, and I'll point out that January, as you'll see in a second, there are going to be some others. And also the pre-firm ones are averaged right around 5%, except those that are required by Congress to increase by 25%, like your non-residential business and your non-primary residential. Those two will see the typical high 25% increase. And those will continue on until they reach full risk rate, at least right now, according to the current legislation. And Chad will be getting on, hopefully here, to highlight those changes in a minute. The re-underwriting, primary residence, it was pointed out to FEMA that there are situations where spouses do not necessarily live, they're maybe policyholders, but they don't live in the same residence together the entire 50% of the time. It may be and one might stay up in New York and the other one will be in Florida. So now with the proper documentation, FEMA does allow people to have two primary residences. And finally, FEMA is going through to answer Congress's request to communicate the flood risk to all the policyholders. They first wanted to make sure that the policies were being rated accurately. And so they set up a two-phase approach to re-underwrite all of the 5 million policies. The first phase has just been completed, and many of you may have gotten lots of phone calls about, hey, now why is my premium changing, or I need to know what flood zone I used to be in or am in now, etc. They underwrote everything but the post-firm policies when they came up for renewal. The post-firms were supposed to start this October, but due to the hurricanes, FEMA has delayed the start of that requirement for your companies and agents to April. The company are started. So by April of 2019, hopefully the entire book of the NFIP will be totally re-underwritten. And then as it comes up for renewal, certain things FEMA is requiring to confirm, like what the flood zone is. So hopefully our FEMA will have a really good handle on how many policies are grandfathered, are pre-firm, subsidized, rated, are mapped, are rated using the newly mapped procedure, etc. Coming up in January, and these are the typical ones that now happen, October and April, and then in January of each year, PRPs will see changes. The PRP premium will increase 6%, a little higher than in the past, and the newly mapped policy procedure multiplier is staying at 15%. And finally, just to let you know that there is a new NFIP direct vendor taking over. It used to be performed by a vendor called National Flood Services, and recently Torrent was awarded the contract, and that switchover will be starting December 1st. Unfortunately, at this time, I don't have any additional details of the new addresses and contact information, but as soon as we do, we'll put out a bulletin on that.
Hey, Bruce, this is Chad. I just want to let you know I'm on by phone. I can't get the Skype thing to work, but I can go through the slide. I have it up, so thank you.
Okay. All right, great. And that leads very nicely into our next one on the NFIP reauthorization. As many of you may have heard and followed from ASFPM and other sources in the media, there were so many bills up on the Hill, it was kind of like whack-a-mole, or what I call whack-a-bill on the Hill. And ASFPM, Chad, Larry, Dave Conrad, Marianne Firth, and many others tirelessly tried to stay up to date on all of those changes. And to give us that update, we've got our Executive Director, Chad Bergenis, on the line. So, Chad, I'm going to flip to the summary slide and let you talk from that.
Okay, great. Thank you, Bruce, and appreciate being on. And it sounds like the insurance committee is has a lot of activities happening. So on NFIP reauthorization, at this point, the key date, I think, is December 8th, 2017, and so the question that I think everybody wants to know is, is what's going to happen then. So again, just maybe a quick recap, is that the House last week, I guess it was last week already, my goodness, passed its bill. And what was really kind of interesting is that the House basically had 6 bills that it needed to knit together. And over the summer and the fall, nobody quite could figure out how the heck that was going to be done. And then boom, 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 there it is. We have a single bill, and it passes the House. That bill did represent some compromise on some of the 6 bills, and primarily compromises between Chairman Henserling and groups like the home builders and the realtors. And so I would tend to agree that the compromises, at least some of them, probably improve the bill, but overall, from ASFPM's point of view, the House bill is a pretty bad bill that actually passed. And we did write a letter to and sent it to the entire House of Representatives the previous week when we thought that it was going to be taken up. And in the House bill, the first thing I'll say is that there are some good policy proposals in there. And so, for example, there's about a half dozen or so. One of them is a national disclosure requirement. It's Section 109. There's a authorization of a community-based pilot insurance program, Section 110. A demonstration program for flood savings account, Section 207. Community accountability for repetitively flooded areas, Section 402, and that basically requires that in mitigation planning for rep loss areas that you have tangible mitigation actions as part of your plan. And enforcement of mandatory purchase requirement, it kind of ups some of the penalties, which is Section 508. So essentially we have 5 good sections of law, but dozens of other sections that aren't so good in there. And so, happy to make this available to the committee members if you're interested in this. And we try to kind of stay at about a 20,000-foot level in terms of it had like 5 titles, and we kind of pointed out some of the problems we had with each title in the House bill. I think a couple things in the House bill to pay attention to. One of the big reform items that seems like everybody wants to try to address is affordability. The House bill has a very different affordability kind of proposal where it basically rolls it down to the states and authorizes that a state can create an affordability function within their state. But what it would also essentially do is create a brand new cross-subsidy on NFIP policies in that state. And so, from an association standpoint, new subsidies within the program are not good, especially when it comes to communicating risk through pricing. So it really, and I think the other concern is that it's probably not workable because you're not going to have states really go out there and say, yeah, we have an affordability issue, so we're going to raise everybody else's rates to deal with it that way. So, that was a little concerning. Also, there is a new cap on premiums in there that again is a little disconcerting because it's the association's position that we need to get to full actuarial rates. The big question there is, what's the glide path so that we're doing it in a way that people can adjust. Title II focused on basically increasing participation through the private market development. So essentially it was the Ross Castor bill, and without belaboring that a whole lot, there were ASFPM has no fundamental issues about private sector being involved in flood. And again, I think as insurance committee members, you understand too, private sector has always been part of flood to an extent. But what we want to make sure is that we're not undermining the other elements of the NFIP that make it the nation's primary flood risk management program. So none of those considerations and concerns that we forwarded over the last year really made it into the bill, so that became a concern. There's a title on mapping, and what was really kind of interesting is that the mapping title has some sections on appeals and really did nothing about the authorization or the need to do mapping quicker, better, faster, and then also kind of this new idea that communities can make their own flood maps. So kind of our comment there is that the mapping section missed the boat entirely in terms of the real concerns. While appeals are always out there, it's not really a national level concern when you look at, the rate of appeal, per map panel produced in the nation. And then if you even go to the Scientific Resolution Panel, which is the ultimate arbiter of appeals, overwhelmingly those cases, FEMA or their contractor wins because the maps that are being produced are quite good quality there. So we try to refocus and say, hey, the big picture issue is we need to get mapping done in the country. Then there was a supposed improvement in mitigation. We'll acknowledge that it did increase FMA to an authorized level of $275 million. It's been appropriated the last few years at about $175 million. But that isn't even really enough to deal with the repetitive losses and all the other mitigation issues that we have. ICC, it really didn't do anything for. It allows for an optional ICC amount of $30,000 extra should policyholders want that as an elective thing, but nothing increasing the minimum amount or some of the changes that ASFPM has said. And then the whole notion of repetitive loss properties and things, and again, the House bill proposes this new class of rep loss properties, extreme repetitive losses. So, if RLs and SRLs weren't confusing enough, this proposal is let's just create a third category of it. And the bureaucratic complexity of that by itself is a little disconcerting. So, and then finally, from like a program integrity standpoint, the most important reform that is not really in the House bill and barely in some of the Senate bills, and that is the long-term financial framework of the NFIP that really deals with debt forgiveness and setting, limits or amounts above which, there's a reasonable expectation that either debt can be forgiven or some other approach. And in our letter, the thing that we try to point out is why don't the American Association of Actuaries actually came out with a really good proposal this past April or May, and essentially the idea is, FEMA takes advantage of all the financial risk management things it has, reinsurance, reserve fund, and all that type of thing, and Congress needs to really develop what's called a sufficiency standard. Above what point are losses where, after taking all of those risk management factors in play, that something like the debt would be automatically forgiven or dealt with. And so one of the points that we make is, some people may not like the fact that there could be some automatic forgiveness, but for instance, crop insurance is about an $8 billion annual subsidy that the taxpayers are paying for. So those are kind of some of the concerns that we had in the House. Now, one of the questions was, would the passage of a House bill compel the Senate to act? And the feedback that we're kind of hearing right now is not really. In the Senate, you have a whole other set of issues in play, including the chairman's issue of wanting to highlight the need for wildfire and wildfire mitigation assistance, totally unrelated to NFIP, but the chairman is from Idaho, and so the committee draft had some wildfire stuff in there. But in the Senate, essentially, there are 3 bills. All 3 of them, I would say, are more comprehensive when it comes to looking at the NFIP as a comprehensive risk management program. All 3 of those are more comprehensive than I would characterize the House bill as, and ASFPM has actually endorsed all 3 of those. because they all have very good ideas when it comes to addressing affordability, when it comes addressing to things like ICC and mitigation. Even when it comes to addressing even the long-term financial framework, I think it's the SAFE Act, the Menendez bill, that proposes to freeze the interest paid by the NFIP on the debt and actually using those savings to invest in mitigation. All of them deal with flood mapping in a more robust way as well. And they deal with private flood, I would think, in a more thoughtful way from the standpoint of making sure that no harm is done to the NFIP. So, so the best that we can do with our crystal ball at this point is, we would expect, and what we're kind of hearing is that there may be a short-term extension, maybe till the end of December, and then a series of short-term extensions. We actually floated the idea of how about having a full year extension or something like a year, 18 months. And part of that is coming from the need to reflect and possibly even have hearings on the hurricanes from this year, from Harvey, Irma, and Maria. One of the things that we are tracking very closely from a policy side is the impact on private insurance due to those hurricanes. Because even though it's a fairly small industry when it comes to writing primary homeowners insurance, that's where private flood is geographically concentrated. Really, is Florida, kind of Texas, the Gulf Coast area, and we are hearing that the industry did suffer significant losses. We've also heard rumors that come renewal time next year, that there could likely be major pullouts of private companies from certain geographies and or significant rate increases. And it would seem to me that if private flood is really one of the big elements of NFIP reform this time around, that maybe there would be a desire to understand after a large loss year like 2017, kind of what the capacity and what the impacts are of having these events. So again, we floated that concept. I don't know how much receptivity it's going to get, but that is something that we put out there. So I think with that, I'll just end and be happy to take any questions.
Hello, this is Bill Mackaman. It's a good opportunity to see whether you can hear me if I take myself off mute.
There's an echo, Bill, but like you're in the washroom, but otherwise, yeah.
Okay. I was at the New Jersey Association conference last month, and actually SmartVet is getting into the insurance business, and had a presentation which I found mildly disturbing. That they're a good company, they know what they're doing, but it seems like they're offering insurance without even requiring elevation certificates. They're kind of looking at the neighborhood and offering a base rate for that neighborhood. And I kind of wonder about the liability they're getting themselves into by doing that.
Is that a comment, or are you looking for Chad to give a comment on that? Sorry, Bill.
Well, I don't know if anybody has a thought about that, and I might have misheard what they were saying, but it does seem that that's indicative of the private sector, that maybe their ratings are not necessarily based on a structural risk, but based on a neighborhood risk.
Well, I'll jump in and say we've got a section at the end about private flood, but I too have seen those. I've seen where they are looking at what the flood risk has been in the past. I had the privilege of sitting actually in the box at Lloyd's a couple weeks ago and watched specifically one syndicate where they look at different models and try to determine what the flood risk is from that, and not necessarily use the elevation certificate. So they're trying to come up with a rate from a different approach than what has historically been the way FEMA. Whether that is right or wrong or better or smarter, I think time will tell. That's my 2 cents on it. And also, Rebecca,
Hey, Bruce, can you hear me?
Yes, we can hear you.
Great. So this is Tyler from SmartVent. So I just wanted to address that. I guess my presentation that someone was sitting in at the NJFM conference. So what I went over, and I'm sure you're going to go over, like you said at the end, that's not us offering it. That's the insurance carrier and how they are doing their modeling and determining of rating the property. So it's not us. It's just ways carriers are rating properties in the private marketplace.
Great. Thanks for that clarification, Tyler.
Sure thing.
And there are other carriers who still use the elevation certificate. There are those carriers who are just taking the pure pre-firm table of subsidized rates and giving a discount off of it. So there are different ways of premium being determined by the private carriers. If you, at least on my screen, in the left-hand corner, there's a little like message box, and if you put your mouse over, it'll say I am. So there is a way to also send messages. So as we're talking, if you've got a question, you can also submit it that way. I'm looking at it as well as Becca's now unmuted us. If it does become a problem, Becca will put us all back on mute here. With that, let's move to a part about the elevation certificate.
Hey, Bruce, this is Chad. I need to run. I apologize to another call, so I'm going to go ahead and sign off then.
Okay, great. And if we get a question about the reauthorization, if we can't answer it, we'll make it up. No, I mean we'll get an answer for you. And
Sounds good. Thank you, Bruce.
All right, thanks, Chad. So the elevation certificate expires in November next year. And at the August FIPNIC meeting, IBHS meeting, we asked FEMA to organize a work group to look at enhancements, changes, et cetera, more proactively. Most of you remember last time it came out and ASFPM got hit with a slew of concerns. FEMA listened to them, but it took a while to get them changed. And even when that came out, there were still some minor changes needing. So FEMA came up with a request to form this group. We were notified of it just this end of last week. We quickly have formed a committee, a little subcommittee, if you will, work group to identify areas that we see could improve and could be enhanced, added, maybe revised. Heading up that work group is Bill Neckerman, and so I've asked Bill to just kind of highlight some of these suggestions that we might be putting forward to FEMA in our first call, which happens to be tomorrow. So we're excited that FEMA is doing this work group and really want you guys to get any input to us ASAP. But with that, let me flip to the next slide. And Bill, if you could maybe get a little closer to your microphone, we might be able to hear you a little clearer.
Bruce, is this a little better?
Yes, a little.
Okay. So Bruce reached out to me on this on Friday and said, gee, Bill, you're retired. You've got lots of time. I bet you can head this up. Because I don't know how to say no, I said sure, and I'm co-chair of the Floodplain Regulations Committee currently, and clearly this is an issue that has overlapping interests between the Insurance Committee and the Floodplain Regulations Committee. So we bounced things back and forth. Del Schwells from Florida was kind enough to piece all of our comments together and also add some of his thoughts. He's been doing training on elevation certificates for quite some time. My own background is many years as a state NFIP floodplain coordinator in New York State, where I see some of the mistakes that happen with elevation certificates. So we bounced a lot of comments back and forth. A lot of the comments have to do with wording in the instructions rather than the certificate form itself, although there were some issues with the certificate form. Some of them are fairly minor, such as the electronic form not being able to take in an NA because a field might be programmed only to take in a numeral. So we've gone through those. This slide shows some of the major ones that we talked about. For instance, in the instructions, the lat long in the instructions says to take it out to 5 decimals, and then they give an example taking it out to 4 decimals. Also, the degrees for lat long do not have a similar requirement for how many decimals it should be brought out to. The elevation certificate states that photos should be provided if this is used for insurance purposes. Well, it really doesn't make sense to say, well, this is being used for compliance, we don't need photos, but oh goodness, a couple months down the line, the property owner is going to have to provide this for their insurance agent. So they're going to have to come back and get photos. So why don't we just require photos in all cases? It's not too difficult to comply with. And by the way, the electronic form, and I don't know whether this has been solved or not, apparently was set up so that you can add a photo, but if you made a mistake, put in a picture of your dog by mistake, you couldn't delete it, you could only replace it. A lot of discussion about crawl spaces, enclosures, attached garages. Part of it has to do with engineered vents, in which it's not clear that if you use an engineered venting system, you should put in the square footage equivalent that those vents are rated for. Also, following the instructions, it appears that including the engineering view of the engineered vent is optional. It's like include it if you have it, and we feel that that should be mandatory and not optional. A lot of wording clarifications. For instance, it suggests that if you need information on your map panel or your map panel date, to call the Map Service Center call center. Well, all this information is in the MSC in the website. So we suggested wording changes to direct people to the MSC, and as Dell suggested, if somebody really can't figure out how to find a map panel on the MSC, maybe they shouldn't be filling out elevation certificates. And I know that people can get help from their state offices, from their local offices, from FEMA if they need it. Elevation accuracy, the instructions indicate to bring it to 1/100th of a foot. That really doesn't make sense. Let's clarify that elevation accuracy should be to 1/10th of a foot. Here's an issue that came my way on occasion. You've got a split level house. You've got maybe 2 different below grade elevations in the split level on a pre-firm house. What becomes the next higher floor for rating purposes? So we discussed a bit that there might be some situations in which the 3rd lowest floor needs to be included, not just the lowest 2. Some clarifications, some corrections about fillable boxes in the forms. Again, this has been pretty quick. It follows up after some comments that Bruce had a group that came up with shortly after the last elevation certificate went live. So some of those issues have been dealt with, some have not. Bruce, correct me if I'm wrong, but I believe that you're posting the latest comments on the Insurance Committee's website. Is that correct?
Yeah, that link below on the slide for those who are on, and we will be posting a PDF of this presentation up on our webpage, Insurance Committee webpage, at the end of this presentation. So yes, it's up there.
So my understanding is that FEMA is on fast track with this. They're going to have weekly meetings for at least the next 3 weeks. There's a call tomorrow, which I assume is going to be mostly about the decision-making process. But I'll be prepared to bring comments to them. It's unfortunate that the ASFPM to only provide a single representative, so that kind of my work is cut out for me on that. We have a small group out of the Regulations Committee that has offered to provide some input, and if there's a small group out of the Insurance Committee that wishes to do the same through Bruce, myself, Dell, will be in touch with each other through the process, so we can have some lots of back and forth communications, and hopefully I can get the correct issues and the correct corrections to FEMA's consideration, and then bring their comments back to the folks on the committees.
Great. Thank you, Bill. And a shout out, I don't know if Dell is on, but Dell Schwalz kind of compiled all of our comments. I'll back up. We've got people like Becca, who has coordinated this call on the committee, and Dell Schwalz, Mike Graham, and Steve and I are on it, as well as Bill and Dell. And it basically was based on people who had given us feedback, a lot of feedback last time. So these are the people Steve and I could get together quickly, and did. So we strongly encourage people to go to the link below, see what we're proposing, and give us feedback quickly. We're hoping to start the dialogue Wednesday, tomorrow, with FEMA, and keep it going for the next couple weeks, and see what other issues. There will be somebody from the Surveyors Association, somebody from the insurance industry, and then several FEMA folks. So we greatly appreciate FEMA reaching out this time and being proactive, for sure, on that.
One key thing on this is that a lot of the folks involved in this, particularly on the FEMA side, are involved on the insurance rating side. And as many of us know, there's often a disconnect between the insurance side of FEMA and the floodplain regulation side of FEMA. And we all want to make sure that the elevation certificate works for both sides of the shop.
Great. Thanks, Bill. What we wanted to highlight in the next couple slides, some updates. One of them is an ICC. With the hurricanes that came across, FEMA put out a bulletin reminder about ICC and HMA grants. And so it just kind of led to us, we should remind people, because not only have we had these hurricanes, but you folks out on the West Coast had a horrific fire season, and as we know, flood follows fire. And so ICC can be a critically important coverage that often is forgotten or overlooked. So first of all, the importance of getting coverage, but second of all, reminding people about ICC. The web page, the first link up there, gives a good overview of what ICC is. But FEMA's now added additional documents, and 3 new ones that we wanted to highlight is, one, this great checklist. This is a policyholder processing checklist, something you as floodplain managers, or if you happen to be an insurance business, have this around. Give it to your adjusters to hand out as well to that. So strongly promote downloading and sharing that. A new FAQ came out, several pages long, but it identifies what the common questions are and what those answers should be. And it helps you better communicate about the coverages and be prepared for those questions you're going to get from perhaps the policyholder. And finally, a new brochure. This is an updated version of the last one, F663. So have that around in your office as well. So when people come and talk to you about claims and losses, you can have this handy, or send them the link to it. As you know, we've had been following ag structures in the floodplain. It's been a top thing. I'm going to pass the baton over to Steve and give us what update there is.
Well, unfortunately, Bruce, there isn't a lot to update. This was a big topic in Kansas City, Missouri, and since then there hasn't been a whole lot that we've heard back, although we have heard that FEMA has completed a paper about agriculture structures in the floodplain as a draft. Haven't seen it yet. I am in Region 7, that's Kansas, Missouri, Iowa, Nebraska. We have a Region 7 meeting with FEMA on December the 5th. And on the agenda for that meeting, we have a 1 hour and 15-minute time block for an update from Aaron Cobb at FEMA about agriculture structures in the floodplain. So I'll probably know a lot more after December 5th than I do right now. But right now, there just isn't a lot of information to share.
Great, Steve. And hopefully we will be hearing an update at that next meeting you have, and perhaps we'll get to review the paper. I know that California also has submitted at the beginning of this year recommendations. I think it was this year. I've lost track. Mary, I know you're on the phone, of recommendations they have. Might have been the previous year. So definitely, I know you guys will be interested as well. Finally, we're going to finish up with a discussion about private flood. As you know, since BW12 and Hafaya, there's been a surgence of products. And the beauty of those things is the costs seem to be lower in many cases. They're offering broader coverages. We're seeing replacement costs. We're seeing higher limits. We're seeing additional living expense. A lot more flexibility in the product. Many of the ones I'm seeing these days are also including a summary sheet of what's different than the NFIP. And typically it is, changing the words of FEMA or NFIP or whatever to their words, but typically not. They're trying to keep it very same, because if they don't, they're afraid that the lenders will not accept it. Lenders are very wary about flood insurance because they don't want to get dinged on their compliance audit, and so they want to make sure that this policy matches as broad as the NFIP. So a lot of benefits to it. But as Chad alluded in his presentation about the reform or reauthorization, there are some concerns. One is, what will the NFIP look like eventually? If ASFPM continues, if the insurance industry continues to increase the number of policies it writes, some of it may be new, but others may be just bringing it over from the NFIP. The NFIP may end up being like a wind pool or something like that, where it's the place of last resort, the carrier of last resort. And so you're going to end up with really high risk policies there. You might not ever be able to get rid of subsidization. So Congress has to be prepared to understand how that may look. ASFPM has raised the concern that, what about those communities who joined just so they could get the availability of flood insurance to the constituents? I don't know how, personally, I don't know how much that will occur, but it is a concern. The big one here is, as the number of policies decrease in the NFIP, that means there's less funds going in the National Flood Insurance Fund, which helps fund mapping, grants, floodplain management, and even the operations of the NFIP. Where is that money going to come from? ASFPM has floated up the idea of an equivalency fee on the private policies, And there was some acceptance to that idea in the past from the insurance industry, but Congress has to understand, okay, if we really promote this private flood, we've got to consider who's going to fund these other activities where the NFIP has in the past. There is also some concern in the current regulations that the House passed that, and the Ross-Kasser, that kind of keeps the door open, that says, hey, if a state approves the policy, it's okay, and that they shall use it. And that shall means they'll be forced to use it, even though it may not be as broad. So there's some concern of the minor wording. So they don't want policies out there that are offering ridiculously high deductibles or skinny on the coverage just to check the box to say they have flood insurance coverage. And finally, there are lapse concerns. Right now, if you leave the NFIP with a pre-firm subsidized policy or newly mapped procedure rating, and you're gone for more than 90 days or let the policy lapse, and then you try to come back, a year or two later, let's say, you will have to have that policy right now, the way the law is written, you will have to have that policy written with post-firm rates. Or you might lose the newly mapped procedure. Or if you had grandfathering, you might lose grandfathering. So some serious concerns there. And then just recently, your insurance committee co-chair, Steve Samuelson, brought up an issue around grants. So in the closing minutes, I thought I'd have Steve give you a highlight of what that issue was.
All right, thanks, Bruce. So just kind of real quick little explanation. One of my citizens in Kansas here, he went with a private flood insurance policy because it was a less expensive policy, and he also took out a higher deductible of $5,000. Long story short, within 3 months of buying his new house in a floodplain, he was flooded 3 times. Well, he went to file for flood insurance claim because they had the high deductible. He also found out his coverage didn't cover everything. He got a small claim, but he didn't have all the repairs made before the second and third floods, so he didn't get too much in the way of claims. He wanted a buyout at that point. He was sick and tired of being flooded. Unfortunately, he can't get a grant for this property through something like FMA because this property is not covered by the National Flood Insurance Program. True, it has flood insurance, but it's not an NFIP policy. So the federal government's not losing any money on his private company paying him out flood claims. So he's not going to the top of the list to get an FMA grant. And he has another issue where his house was actually repetitively flooded before he bought it. Of course, nobody told him that. But the new flood claims that he's had aren't added into the database to make this meet the definition of a repeat loss property to help it qualify for a grant, because these were claims made to a private flood, not to the NFIP. So again, grants is a whole other issue that comes into play with private insurance.
So what we'd like to say to everybody here, and when you get calls, answers, is just have them understand what they're getting into if they sign up for private flood, some of the limitations, and that cheaper cost is not necessarily always better. There are some right now, some limitations. As we discussed earlier, and I saw in the chat, there are carriers who are trying to move away from using the elevation certificate. Not to say it's not important. Definitely in your roles as floodplain managers, it's critical when it comes to construction. But they're using other ways to help try to identify what that flood risk is, including layering different models over. Also be aware that those carriers are out to make money. Just like you are in the stock market, and they are going to accept only certain risks. And as opposed to the NFIP, where you can flood 1, 2, 3, 4, or 22 times, as we've seen in some examples in Houston, the private carrier may drop you, and then you run into that lapse issue. Or the carrier may decide to non-renew you because they have too much coverage in one location, like heavily located in Tampa or in Houston or the coast of Florida or New York or New Jersey. So they may decide the following year to tighten up their underwriting and non-renew. So help your constituent when they call in with questions. Let them know to seriously take a look at the plus and minuses of private flood. At the end of the day, just like FEMA, we want to see more people covered. So we're not poo-pooing the idea of private flood, but just encouraging to look at it with eyes wide open. And with that, I think we're finished up here. We kept this line open for an hour and a half. We tried to keep it to an hour, which pretty close did. But thought we'd see if there are any questions. You can. I see the chat is a bunch of things have been going on while we've been talking. But I think we are unmuted also, Becca. So anybody have any quick questions or comments?
Bruce, I don't know if Tim Troughton is still on the line. He asked me a question. He sent me an email while you were speaking earlier. Is Tim still out there? Well, Tim had a question about one of his citizens who got a form letter telling him that his policy was going to go up if he didn't didn't do an elevation certificate. And I think that what Tim was talking about was those communication letters that, and you can look them up and read them at FEMA.gov/cost of flood, and the words cost of flood are separated by dashes, so it's cost dash of dash flood. And a lot of my citizens in Kansas are getting the same letter, especially the pre-firm house. It's form letter E, and it tells them to go out and buy get an elevation certificate done, and their insurance is going to go up. And what the letter is kind of unclear about is the fact that it's going to go up eventually so much every year. The letter kind of leads them to believe that it's going to go up to actuarial rates right away. And there's some bad communication in the letters, I guess you'd say, just because people don't understand them.
Yeah, the idea was trying to answer Congress's direction in HFIA Section 28 of clear communications, of clearly communicating the risks. So once FEMA finished re-underwriting, they would that policy, they would then send out a letter identifying how they were rated versus what the risk is if it was different, i.e. if they were grandfathered, you're in a zone A and you're at a high risk, but you're being rated with a zone X or at a low risk. But those letters did generate a lot of calls and conversations, both to the committee and what we heard is a lot out to you fellow floodplain managers. So I don't know, maybe Steve, that's something we also work with and see if we might be able to provide some feedback to FEMA before this next set of letters are being sent out when they start the re-underwriting again in April. In the chat, there was also some questions about the elevation certificate. How can we get involved? Right now, we're a small committee, and we're having to act quickly. So the people who put comments in the chat, if you could send them to that email at the bottom of the screen. And for those who are not online, it's very simple. It's insurancecorner@floods.org. That's Insurance Corner, all one word, at floods.org, and that gets over to Steve and I. But we'll need your comments soon, or even questions or suggestions, recommendations. We're open to listening to them all. You guys are the boots on the ground, and so we're looking forward to hearing your experiences and what would make it easier for you to use the elevation certificate, especially as a floodplain manager. What's missing, what needs to be enhanced.
And Bruce, I would just add, before you get a flood of emails, that invite people that want to comment to review what's already under work in progress. That we've got a working copy of our comments up on that website, and you'll send a link with the PowerPoint later to to see what we've already got going. before you make the comment, because it might be duplicative and it might cut down on the amount of emails that you need to get.
Absolutely. Thanks, Becca.
Yeah.
Does anybody, any other questions? Steve, I don't know if there's any additional comments that you'd like to throw out there that perhaps we didn't cover?
No, nothing from me. Bruce, Scott keeps typing in about disclosure.
I missed that.
It was.
Scott, I thought I had. What's the new disclosure? Does it require disclosure prior? I think the disclosure. I thought I had answered that earlier, but I think that refers to what was is Section 109, and it's more about when you transfer property. This deals with the reauthorization and the House bill, I think, is what you're talking on, Scott. That they want a community and/or the state to have passed a law that requires the seller or lessor of a property to give the buyer or lessee certain disclosures about the flooding history of that property. And if they don't do that, and they have to like September 2022, 5 years from now, to pass it, then flood insurance will not be available in that community. So a pretty strong stick on that. So they're requiring to have a disclosure because too many houses, just like Steve's story around ICC, where the guy didn't know he needed flood insurance until the day of closing. They need to know that up front, and then also what is that flood risk. He didn't know that he'd had flooding before. So hopefully, Scott, that answers your question there. Any others there?
I'd like to say this is a really good turnout for a holiday week. I hope everybody has a good day on Thursday.
Yeah. Everybody, wish you a good Thanksgiving. Again, Becca, thank you so much for organizing, allowing us to use your Skype, and look forward to getting comments, as well as there are other issues that you'd like to see addressed on the next call. Let us know. We hopefully will be a little more interactive next time and a little less presenting as we did this time. With that, thanks, guys, and have a great Thanksgiving.